Did you know that to even be considered for the prestigious S&P 500, a company has to boast a market capitalization of at least $14.6 billion? It's no small feat. The S&P 500, short for Standard and Poor's 500, is a major stock market index that tracks 500 of the largest publicly traded companies in the US. It first made its debut on March 4, 1957, thanks to the efforts of Standard and Poor's. The aim was clear: to create a more comprehensive and representative gauge of the U.S. stock market compared to its predecessors, which were either more limited in scope or sector-focused. Comprising 500 of the biggest names in U.S. stock markets, the S&P 500 is weighted by market capitalization. This means that companies with higher market values have a bigger influence on the index's performance. To earn a spot in this elite group, a company must not only meet the hefty capitalization requirement, but also be based in the U.S. and demonstrate high liquidity and stable earnings. One of the S&P 500's standout features is its remarkable diversification. Spanning sectors such as technology, healthcare, financials, and consumer discretionary, this diversification helps it mirror the broader U.S. economy more accurately. It's often hailed as one of the best benchmarks for U.S. stock market and economic performance, making it a popular reference point for investors. The index continuously updates throughout the trading day and undergoes periodic rebalancing to reflect changes in market capitalization, ensuring it remains a true reflection of the market. Over the years, the S&P 500 has weathered significant fluctuations, responding to major economic events like the dot-com bubble burst, the 2008 financial crisis, and the COVID-19 pandemic. Despite these ups and downs, the index has generally shown robust long-term growth. Historically, it has delivered an average annual return of about 10%, including dividends, making it a favorite for long-term investment strategies. Numerous mutual funds and exchange-traded funds track its performance, allowing investors to gain exposure to this broad swath of U.S. companies. The S&P 500's roster is not static. It evolves with the market. Recent additions to the index include Corteva, Tesla, Etsy, Global Foundries, Eli Lilly and Company, Novavax, Palo Alto Networks, NVIDIA Corporation, onsemi. Meanwhile, some companies have exited the S&P 500, reflecting shifts in the market landscape. Alexion Pharmaceuticals, Bristol-Myers Squibb, DTE Energy, Discovery, Bed Bath & Beyond, Xerox Holdings, Conagra Brands, Whirlpool Corporation, Viva Systems. Looking back, when the S&P 500 was first introduced, it featured several key players that shaped the U.S. economy. Companies like AT&T, General Electric, and Standard Oil of New Jersey, now ExxonMobil, were among the original constituents. These companies were pivotal in their respective sectors, from telecommunications and industrials to oil and gas. Today, the S&P 500 is managed by S&P Dow Jones Indices, a collaboration between S&P Global, CME Group, and News Corp. S&P Global, the primary force behind the index, oversees its calculation and methodology. CME Group plays a crucial role in trading and financial products linked to the index, while News Corp contributes to its governance and operation. Together, these entities ensure that the S&P 500 remains a vital and influential barometer of the U.S. and global financial markets.